Oh, hey, homeless shelter's down the street, buddy. Sorry. Nah, I'm just kidding. Come on in. What's your name?
I'm the new intern for Dundermouth and Waukee.
Oh, nice. I'm Michael. Nice to meet you. And what are you applying for?
I'm applying for sales. Here's actually a sheet with all my previous employment and
Oh.
all my credentials.
Okay. Yeah, we won't be needing this. You'll be in accounting, but that's okay. Thank you very much. Just go and take a seat. Thank you. First impressions, they're kind of important to me. He's a little short, a little underdressed, but I think me and Dwight and Kevin will really get him into shape, All right, Kevin's here now. He's going to walk you through the steps of the first step of accounting, It's the only walking you can do without breaking a sweat.
All right, so the first step in accounting is collect and verifying source documents. Those 4 documents is going to be your invoice, which is when the company buys something on account. Then you have your accounting receipt. It is when the company receives cash. Your third one is memorandum. It is when transfers goods in a company. And lastly, you have your check stub for when a company pays cash to another business. The next step is to analyze each transaction and their effects on their accounts. There's always 2 accounts that will be affected, and it will be on a debit and a credit side. Kind of like this. This is cash in bank. If I'm going to say buy a pizza, it's going to credit my cash in bank and my money's going to go down. But pizza in my stomach is going to rise because I will be eating it.
Kevin, are you sure you know what you're talking about?
Me do understand.
All right, Kevin had to make his way out. He had to come use the bathroom. So the third step is to journalize each transaction. And this is not the journal you keep under your pillow, sadly. So the general journal is what you keep business transactions in. As you can see, they have the debit and the credit, like we've been explaining to you the whole way along. Now, the next step is posting to the ledger. Very, very similar to the journal, but instead, this time, once again, you're going to be adding in the debits and credits of each transaction and how it's affected in the journal, but you're adding a second step with the balance. So you're going to continually have a total on that account. All right, the next step is to prepare the trial balance. So when you decided to come back and join us, thank you very much. How was it?
That was actually fantastic.
Oh, great. All right, you just take a seat. We're on step 5.
Oh, preparing the trial balance.
Yeah,
Okay.
exactly. There you go.
So this is where you add up your debits and your credits to figure out if they equal out. If they don't, you will have a trial balance error, and then if you do that, come to me and I'll help you figure it out.
All right. Yeah, I'm learning a lot about accounting today, but I do wish that my degree would actually be used in marketing for my 4 years at Cornell. I still have student loans, and I need to make some money.
Okay, now we are on step 6, which means we are halfway.
Wait, but Kevin, aren't there only 9 steps in the accounting cycle?
Yeah. So, this is an accounting worksheet, and so this has all of your expenses and your assets, also with your revenue, stuff like that. So you also it adds the steps of your trial balance. Then you're going to do your income statement, and then at the end you have your balance sheet with some adjusting entries and stuff like that. All the totals are going to be here. However, for a certain amount of these, you don't add. For the income statement, it's only your revenue and your expenses. But however, you can either have a net loss or a net income, and then the totals that make are the most, or a net gain. And these 4 right here are the most important, and these 2 should equal, and these 2 should equal. Okay, so now that we are on step 7, you're gonna have to prepare your financial statements, and that's gonna be used from the steps that we've used in the past. The first 2 are the income statement and the balance sheet.
And then we're also going to use the statement of changes in owner's equity and the statement of changes in cash flow.
So now that we're on our last 2 steps of the cycle, the second to last, the 8th one is journalize and post closing entries. The closing entries close the balance, and then you transfer the net income to the capital account. You also close all temporary accounts that don't carry over. And then this step finds the new owner's capital.
Doesn't this step also find the new net income then?
Dang, you guys catching on. Look at you go.
So this is your last step. You're preparing a post-closing trial balance. Just one of the easiest steps because all you're doing is adding up all your debits and your credits. However, if they do not equal, you're gonna have to go back through your steps and figure out the error of what you've done. And then that is your steps. So if they do equal, what we like to do here at Dunder Mifflin is do a little dance. This is mine. Michael?
Oh, yeah. There we go. He's already catching on. Yeah. All right, Spoden, you got the job.
Oh, sweet. Thank you.
All right, you got $7.25 an hour.
All right.
Yep. All right. Have a great rest of your night.
You too.
That'll be a great addition.
By the way, I'm putting in my 2 weeks. Thank you.
Oh yeah, no problem. Oh, okay.